Welcome folks, this is a market review for CPI. So on Tuesday we had CPI release, and this is how price played out. So sorry I'm a bit late with that, but here we are. So we dive straight into the chart. So before CPI we had go to the 1 day. So this was yesterday. So we had this high and this high. So let me get this one first. So we had this high and this high. So in the morning we had a run high into taking out those highs, previous day's high. So this is how the daily chart looks like. So this was the drawn liquidity, this high and this high. So also could have done the midpoint of this week. So we had that run high taking out the buy side and then retracing to the downside. So this was yesterday CPI release. So let's go on to the 15-minute chart. 15, and I apologize for the noise. So we had that purge right there, and then we had this reverse. So this was at 8:30, exactly at 8:30. So before 8:30 we had this run high but did not take out this high. So we had this second run into the high. So this was the Judah swing. So when we go on to the 1-minute chart, go over to the 1-minute chart. So this is a 1-minute chart. So this is 8:30, the candle that so as I always tell you, CPI is a two-stage event, whereby we have a run, which is a Judas, and then we have now the real move. So when I saw this wasn't enough for me to view it as a Judas swing. So I had to wait for this high to be taken out. I had this high noted. So when price went above that high, it's when we got short. So this wasn't a Judas swing, because early from London Open we had this run high. So there were some maybe trade stops, and also maybe someone went long here and then they placed their stop right there. So this was to cut them short, and then for them not to profit from this run high. So they were cut short right there, and then a sharp reverse to the upside, taking out the high. So after I saw this, if maybe I had a 15-second chart or less than a minute account whereby I could frame some entries. Now, if you knew about this high, you could have gone short right there. These are actual. I sent this to my Telegram group whereby we sold short. So selling short right there, maybe taking profit in the midpoint of this week. So this, you measure the week, and then you take some partials right there. So like measurement of that week, you could have gotten something. So selling short right there and anticipating for a run lower. So we had a very nice run. These are smart money reversal, or could be selling short right there. So when some retail were put out right there, they were afraid to go long again, and also they were afraid to go short. So this is how it happens. It takes out people who had traded their stops, and then if you now for those who chase price, if they chase price to the downside, it comes back ripping them. And for those who now bought maybe down here and did not exit their positions, it's now their turn now for them to get to get taken out. So when you see this, don't chase price. Wait for something to happen. And this wasn't enough for me to think that we are going to higher prices. It was only coming down to take this liquidity and then reversing for these guys not to profit from this move, from this run high. So this is now the Judas swing, and then now we had the real move of the day. So you could have, if now you could maybe frame some entries. Maybe this was, maybe you could have gone short right there and place your stop just above there. Now you may ask, why am I placing my stop there and maybe aiming for? It was a good risk to reward. There were some lows that were low there, somewhere around there. So it was quite profitable. It was a 4-hour trade there, exactly. So now this, you see, we have this gap. We have this gap. So this will act as a resistance, because now it's an inversion fair value gap, whereby if, for instance, you take that and then extend it through, this would act as a resistance in case price would want to come above. So and then we had this kind of, which is a bullish order block, a bearish order block, sorry. So your stop should be at least above that inversion fair value gap. So this will act as a breakaway gap, which is not supposed to be traded. It can trade into it, but it is good if it stays open. So if it stays open, this shows you that it's really heavy, and we anticipate for a very heavy price action. So and this is equally what we got. So that was CPI. I know maybe some of you got chopped around in this mess, this price action. So that is how we trade news. We don't jump into you see a bearish candle, then you go selling. No, don't do that, because if you do that, you're chasing price, and if you're chasing price, the likelihood of you getting hurt is high, and it might reverse on you very fast. So if you it's CPI and FOMC and non-farm payroll. Those are events that are two-stage events. Maybe some news events, other news events other than NFP, FOMC, and CPI. Those they may be one-sided now, but you have to look for price signatures for you to anticipate for something to happen in relation to whatever has already happened. So if you're trading CPI, don't chase price. This is the second time I'm telling you this. We had NFP last week, so and it did the same thing. So we're repeating the same thing over and over again. So it's not a must that you know where price is likely to go. You just wait, see what the actual release will do, and then after that you can now frame some entries. So that was CPI. If someone have any question, you can ask. So yeah, that's it for CPI. That was a good one. It was profitable. Maybe I show you my Telegram where I sent the signal. So yeah. So this is it. Yeah, it was. So this was on December. So when was yesterday? It was on 13th. Yeah, it was. So we had that run high and then came inside. So this was the actual trade, the actual signal that I sent. So you can always join my Telegram group. It's free. It's free to join. Free signals. Yeah, and that's it. And till I see you next time, be safe.